Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and another week that brought a lot of variety to this market trade. At one point, we saw wheat the leader, then they backed off, and then they came back. But where are we at when it comes to the dollar? We know we've got a WASDE report next week, and all this information coming out of South America, not to mention the craziness that happened on the livestock side. We're going to take a look at that and a whole lot more as we continue in just a moment with this week's show.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again. As you can see, Alan Brugler is joining us with Brugler Marketing Management, and Darren Frye come back. He must have had so much fun last week. He came back for a second week. He is with Water Street Solutions. And gentlemen, as we always do, I want to start with your kind of couple nuggets, the things that you saw that caught your attention this past week. And Alan, we'll start with you.
Well, the main thing that caught my attention was the corn rally. The fact that we were able to punch through a really big congestion zone for December corn around that 478 area. We had a 100-day moving average. We had some retracements. We had a bunch of things in that area. I thought we could rally to there and then we might back off, but instead we punched through it, and then we got some follow through on Friday. So this is good technical action. I think there's very good export, short-term export demand here to help support it. But you also have to look at new crop.
All right. What about for you, Darren?
Yeah, I'd agree with that. Corn, both old crop, new crop, closed this week well, above critical areas of resistance. But also, I really liked how soybeans traded led by meal. Meal really broke out to the upside. I think we have some things going on with soybeans as well. I've heard of some commercials looking for soybeans, calling farmers wanting to buy some soybeans. I don't think there's a lot of soybeans left, but I think there's more going on here than just good meal demand. In Brazil, farmers have tucked the beans away. And so I think beans and meal are kind of interesting, but no different than wheat and corn now. It's like all of them are playing for the long side.
All right, well, let's talk about, before we even started this program, you two were kind of having a great discussion back and forth about what you saw, some of the strengths in this market, and you brought up maybe new money was a part of it. So I'm going to sit back, let you two kind of share your thoughts as to what you see, and Darren, we'll kind of kick it off with you.
All right, well, I was asking Alan what he thought of the funds and short covering. Obviously, we get a commitment traders report each Friday. That will give us a clue whether they covered anything or how much they covered. But in talking with some other people that really track the money flow and where money is coming from, there's kind of the thought process that a lot of this buying has been new money and not just short covering. If that is the case, and we see bigger short positions from the funds today on this COT report, it means that if we really have a catalyst for them to get nervous, like closing over the 100-day moving average, which we did in July corn today, they could really start to move out of some of these positions, especially if we see the WASDE downgrade Argentina or Brazil's crop, or we get into more planting delays. And so that has me kind of perked up as far as what is driving this higher.
What about for you, Alan?
Well, we were talking earlier about that whole new money idea. I think you're going to see the open interest drop because most of us track the combined open interest for options and futures, what's called the disaggregated report from commitment traders. And you had May options go off the board last Friday. And so you're going to see a big drop in open interest just because of that expiration. You saw that in the daily data for several days. I think there is some new money coming in. We were hypothesizing, or at least I was, that the stock market has an old rule that says sell in May and go away and come back after Labor Day. That basically the summer is just a choppy back and forth most years in the stock market. And so we might be getting a little money that says, okay, we've had the big move in stocks. Let's go play commodities during the growing season. We've got some weather stories here and there. We've got some inflation and we've got a weak dollar. Let's see what we can do with this.
Alan, you talked about a weather story. Is weather going to get the attention a little bit more of the markets as more rain continues to move through the Midwest?
I think it's a little bit early yet, given that we were ahead of normal planting pace before it turned a little wetter here. And it's still kind of hit or miss. You saw some pretty good planting progress in the Eastern Corn Belt this week, but you also had some folks out further west that were shut down. So you're still going to see some progress in Monday's report. If this stays wet for another 2 weeks, in particular if it's wet enough that you can't kind of plant around the edges or cherry pick your fields, that type of thing, then there are some pretty good studies that show that by the 3rd or 4th week of May, if you're not planted, you start to lose a bushel or two off the national average yield.
Speaking, looking at what's been happening weather-wise, Darren, it is extremely wet in parts of South America. I saw a video earlier in the day of a gentleman walking his dairy cattle through utter deep water just to trying to get them to higher ground. What are you hearing out there with what this is and what toll it could take on the crops that are left in the field?
Yeah, that Rio Grande do Sul area has about 4 to 5 million metric tons of beans still to harvest, and they've taken about 10 to 20 inches of rain over the last week to 10 days. They got another 5 to 10 in the forecast. And so that's where the problem is. And that could cause field losses for sure, but also really a quality issue is really the risk here. And they just can't get to those beans. So I think that's part of it. And then the other weather thing going on in South America is really for about 55% of the safrinha crop, it kind of pollinated later. It's down the central part of the country. And we see it very dry down there. The monsoon is fully shut off. I don't expect a lot of rain, if any rain, here going forward to the end of the year, and it's pretty hot. So there's questions about how well that grain will fill post-pollination. So if there's a little stress there, I think you got a combination of corn in Brazil and of course bean trouble in the southern part of Brazil. And that's what we're seeing. Argentina seems to be doing pretty good now, other than this stunt disease that they've had. And of course, it's making a lot of headlines out here.
So having said that, what do you see coming from that as Argentina tries to move through the issues that they've been having?
Well, I think they're going to have a smaller crop. Alan and I were talking about that before we came on the air. And I think that, a lot of the privates are 46 to 52. I think anywhere from 49 to 52 is a really good guess. I don't know if USDA is going to come down to that, but they might come to 53 here on next week's WASDE. So we'll see what happens.
What do you think, Alan? Could we see some adjustments in those numbers, or will those two organizations get a little bit closer in those trade?
Well, we know the history that in Brazil, CONAB and USDA are typically fairly far apart, and then they both raise, but they do come together after the March reports. This is a little different year setup weather-wise than some other years, so I wouldn't count on that upward revision necessarily. But I think the thing you want to watch for this report coming up the next week is this is the first USDA official estimate for 24-25. So we'll get a whole new set of world numbers. We'll get a whole new set of U.S. numbers. They gave us the outlook for them back in February, but other than that, everybody's still guessing about new crop. I'm trying to tie that together with the discussion we just had about the dryness in Brazil, because that winter corn in Brazil typically doesn't hit the world market till late June, and then hangs over into the U.S. crop into our new crop marketing year, September. So USDA is going to have to, I think, cut their South American production numbers a little bit. But it's going to be very interesting to see what they do about global demand for 24-25.
Kind of a quiet week on the wire. Now, I know there was some unknown soybeans that came into play. Can we assume that those unknown soybeans were to China? Either one of you?
That's kind of a default assumption, but of course, sometimes it ends up being European buying. It's going into some European port, but they don't know which country yet. That type of thing. China's the biggest buyer, and there's a natural assumption that that's where it's going. But we also want to watch the FOB prices. The U.S. has not been competitive on beans, and that we've gotten a lot closer here recently. We were hearing there was some pretty big farmer selling in Brazil this week. particularly on that Thursday bean rally. But again, big in what context? What's the volume?
What are we going to see? Weaker dollar? I mean, we saw that, Darren, beginning of the week, and it kind of built up some steam and momentum. What's your thought and takeaway?
Well, I think the Fed's really got a challenge ahead of them, and obviously they're going to leave interest rates up. I don't even know if we're going to get a cut until the fourth quarter, and it's still left to be determined whether we get a cut or not. So the dollar might taper off here for a while, but I still think the dollar is going to continue to move higher. I don't see it going lower on the charts, and I think that's going to be some headwinds for our commodities. There's going to have to be fundamentals that overcome those headwinds, but the stronger dollar, I think, is something that we're going to have to contend with, at least for the next 8 to 12 months here.
Didn't see a super strong finish on the cattle, but still had some green after the crazy week it had. Do you think, Darren, that momentum will continue into the new week?
They had a poor close yesterday. They closed about $1.50 off their highs. Feeder cattle, $2 off their highs. They're really caught between critical support and critical resistance. I could see, because of numbers and because of what we think is seasonal demand ahead of us, the market going higher, but we haven't seen that show up in boxed beef yet. So that's a concern. We know weights are heavy, and what we really got as a hangover here is bird flu, as the USDA is now testing retail hamburger in about 9 states, trying to find out if any of it's tainted. And so it's like they're looking for a consumer issue to help beef go down. But time will tell. If we do fall below support, we could have a really big washout here this time of year.
Alan, do you think consumer confidence is going to continue to wane?
I don't think that's the main issue. I think the main issue is just that beef is fairly expensive year over year. The consumer is getting squeezed by this inflation from all the federal money printing over the last couple of years, and you've got to decide where your money's going. I think going back to the cattle, though, the two things I'm watching for is that the wholesale demand for Memorial Day is typically going to kick in about 7 to 10 days from now. That's when the retailers are going to be stocking up for Memorial Day. That's where you should see the demand on the box beef prices, and we've had a very tight fit between the 5 area cash cattle and the box beef recently. The other thing that I point out there is ready numbers. That is the numbers that are ready for slaughter are going to be down compared to most recent years as we go through May and June here, just because of the placement pattern. We're offsetting that a little bit with the heavier carcass weights, but it's going to be historically tight as far as the packer being able to find cattle to buy. If he's got movement on the beef, then I think we can see some higher cattle prices here.
All right. Well, gentlemen, we have run out of time. Thanks for joining us this week. A real quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Nebraska Soybean Board Weekly Market Roundup.